And we're live. Hello and welcome to the 149th episode of HEX Therapy Live. I'm your host, Maddie ALLin. I've got a great show for you tonight. We're going to be talking about disbelief in terms of the cycle of market emotions. Also, what goes along with that? Skepticism and FOMO. So we're going to do a psychology check-in here, and it's going to be great. I can't wait to get into the content for tonight. Thanks for tuning in. Hit the like and subscribe button. Welcome to HEX Therapy Live.
It's from Maddie ALLin of HEX Therapy Live. I like Maddie. Maddie tries to make the world a healthier place. He's a mental health professional. He's done research.
Videos on sudden wealth syndrome.
There's nothing that a human being could do better than try and heal his fellow man.
Maddie ALLin's got that covered. He does emotional, feel-good, mind management, emotion stuff, like, as his gig, because he's a therapist. That's what he does for a living. Like, he helps heal people.
Well, I have to say, I've been really impressed with everybody showing up to the live streams lately, despite this being the longest bear market in crypto history. We had 3 weeks ago, Access Live. We got over 7,000 views between YouTube and X or Twitter. Then a couple weeks ago, we had Johnny Chaos on. He got over 6,000 views across the different platforms, probably closer to 7 as well. And then we had Dipcatcher on as well recently, and that episode was outstanding. And so if you haven't caught this series that we've been doing on Tuesdays to go do a deep dive with one of these giga-brained experts in the ecosystem, then you definitely have some catching up to do, that's for sure. I know I listen to a lot of other streamers. I appreciated hearing Crypto7 and Tangent shouting me out the other day, saying that they've been tuning in to this content, that they find it valuable. And I can say the same thing right back. And so definitely appreciate this community. When we look at the numbers that the major Bitcoin podcast channels are posting, they're very similar to the numbers that we're posting here on this channel. And that's incredibly surprising, given that Bitcoin has 1,000x more adoption measurably, like maybe more than that, right? Bitcoin has millions of users, and HEX and Pulse Chain and what we're doing in our tiny corner of DeFi, I know that there's something to it because I can see the social proof. And maybe that's what I should have titled this episode. Maybe that's a topic that we need to revisit from time to time. But the social proof, the proof of participation. Now that term has been corrupted by NFTers. Hey, who doesn't love a good NFT, especially a proof of participation NFT? But what I'm talking about is in the broader sense of who's tuning in, who's learning, who's asking the right questions, and how the hell have we had a twice weekly show continue to not repeat too much of the same stuff for 149 weeks. Now, the channel here also had our third birthday. Not 3 years since I've been doing weekly live streams. That started maybe a month after I started the channel. But the very first video, you'll notice, what was I talking about? Way back on October 3rd, 2020, when I started the channel, I was talking about the exact same things, the same values that I'm talking about today: crypto and mental health, trying to observe ways for people to, whether it's dealing with sudden wealth syndrome or the opposite, what we're talking about today is disbelief, skepticism, FOMO, not being in control of your emotions. Whether, there might be some similarities there too, but the last time I streamed with Richard Hart, I guess it was the last time he streamed at the beginning of the year for the HEX conference, he was definitely roasting me about like being known for helping people with sudden wealth syndrome, because this year has been in a bear market. But really, I think the reason why everybody wanted to listen to what I had to say about sudden wealth syndrome is because it's something that doesn't get talked about enough. It's obviously people realize that I'm passionate about the mental health side of crypto. But yeah, it's more than just the mad gains, and I'm wanting to expand my what I'm known for, basically, as going beyond just what do you do when you get rich? How do you deal with your first world problems? Which, I mean, look, if everybody wants to be economically secure in the world, and it's something that we should all strive for, and some get lucky, and so it would really suck if technology continued to advance in such a way that someday everybody was living in abundance, but nobody was happy, right? Like that wouldn't be a good world either. So I don't want to discredit like the usefulness of working on the problem of sudden wealth syndrome, of addressing that small aspect of crypto and mental health. But there are all these other aspects of crypto and mental health that of course I've been studying, I've been curious about, I've recently started writing about. I developed Time Pays Me. We continue to find new use cases for that, and much to my pleasure and bewilderment, it's been really cool to build in this space, and again, to go back to this community. And I mean, so all right, so I'll go back to the point that I said about Bitcoiners and how we're different. I don't hear Bitcoiners talking about mental health. I hear them talking about doom porn, the economy is going to crash. And again, I'm not going to discount that there aren't serious problems in the economic system. But I don't hear them on the accounting side of things with Bitcoin. But that's not going to address the real issue of needing to increase productivity without being a totalitarian state. In fact, being a totalitarian state, I would say history has proved that doesn't really drive productivity very well either. And so there are probably some behavioral principles, right, that could be applied to behavioral economics. And so that's kind of an angle that I continue to be fascinated with, and continue to try to expand my speaking and writing and understanding in that area. So you guys will probably hear me talking more about the every 7 years studying cryptocurrency and many more years studying psychology, how these two are going to intersect, and how I'm going to get my thoughts clear and on paper, all that good kind of stuff. So I think the live streams, I think they're going to benefit from me being in writing mode now. And so there's something different about HEX. I think it's because people have time locked and have been incentivized to work together, to show up, to be public, to build a community. And I just think that I thought when I first realized that was happening in HEX in the first 6 months I was involved, right? When I got inspired to become a broadcaster, I realized that there was something special here. And so I can see it in the view numbers even today. And I can see it kind of in the vision I have for the future of more and more people experiencing positive benefits of mental health and crypto, of becoming a more productive version of yourself by your own choice, right? Like I mentioned that whole idea of Bitcoiners not really providing a solution to probably an entire half of the equation, right? Because like if you stop excessive inflation, that the numbers are being cooked, they're not even real, it's all you have to do is look at the money supply. Like the money supply equals inflation. The consumer price index inflation that's a government, like the government is incentivized to misreport that, and their methods keep changing. So you don't typically trust, quantitative sampling if you keep changing the methods. That's like not very valid now, is it? So, so you've got an issue with inflation. We know exactly what inflation is. I put a tweet up about it today. What did the tweet say? I was looking at the past 10 years of just like the money supply expansion. And the bottom line is that the price of everything was doubling every 5 years. Here we go. It says US money supply has expanded 14% annually over the past decade. So I'm not looking at the consumer price index, I'm looking at the money supply. The zeros and ones that get sent from the Federal Reserve to the US Treasury, right? And elsewhere in the central banking system. Oh my God, I read the most complicated and detailed summary of the latest monetary crisis as written by Concoda, who is, I'm under the impression, an alien who was sent to Earth to, not a real alien. People talk about that strangely these days, but I'm talking about like, this guy is so smart, or a person is so smart that it's very difficult to understand what they're saying. But the charts and graphs, anyway, I fed them into ChatGPT, and I finally got an understanding of really what Concoda has been talking about in their latest Substack. This is probably the top 3 people in the world, I would say, understand the current economic system. Actually, it would probably be the number 1 person who's public about it. And so that's concoda.substack.com. I think I subscribe. There's a free version, but I am so enthusiastic about this particular reporter that I believe I support them $100 a year. But just the bottom line of like the 1 or 2 hours of research that I put into this like incredibly detailed expose on basically the repo apocalypse that had occurred, basically that keeps happening with the debt spiraling out of control, and with all of these the complex plumbing of the everything. Like, if you go back to the 2000 to like the Lehman Brothers collapse, you remember that there was a term called LIBOR, like the interbank, the London interbank lending rate or whatever, right? And LIBOR was being manipulated and lied about and everything. Well, they keep inventing new ways to bail out banks, and they don't even call it bailouts anymore. And it's like this entire repo market of like the bond. It's basically like an overnight facility that lends money that then creates a bunch of incentives for different central banks and different entities that hold all the value in the world on paper, all the trillions of dollars. Like, it's just kind of shuffling around the different interest rates, the rates that different institutions can borrow against each other. And that's kind of what the Federal Reserve uses to measure what the real economic activity is expected to be. Because if you just asked the market, like if you just went off the stock market, you asked what are the risks, then all the central banks would be like, or all the bankers, they would be like, no risks at all, like pump our bags to the moon, because they already own all the stocks. But so this way complicated plumbing structure of things that are way more complicated than LIBOR, overnight emergency swap lines that have been created that never existed before. Like the financial system I mean, it's like you could cast it in a positive or a negative light. You could call it like a zombie that keeps being brought back to life, or you could think of it as like an extremely well-oiled machine that is able to motivate people and is giving the best that society has to offer. Like you could frame it as a good thing or a bad thing. And I think it's intellectually honest to explore that there's probably some truth to both, that like society wouldn't have gotten to where we are if there wasn't credit and monetary expansion and central banks. But then again, we also have a whole lot of history in humanity of like where, infinite money printing that didn't work out, again, because in the accounting system, you can make up anything you want, but in the real world, you have to produce more goods and services in order for people to be more wealthy, in order for people to have a higher standard of living anywhere in the world. They need more goods and services being produced. And if people are happy or generally happy or not creating riots in order to like go to work and add to the economy and the society, then things work out better than if everybody's getting robbed from and not having enough to get by, and there's a shortage of goods and services. And that's partially what inflation tells us, is that one half of the equation is it's like it's not in balance. Either there's too many dollars on the accounting side of things, or there's not enough goods and services, right? And so when we look at Bitcoin as being like, oh, we have a scarce supply, we're going to, and crypto in general tends to claim that you can trust the monetary policy, the inflation, the printing of new dollars, basically the supply side of the equation. You can trust that better because it's math, because it's held to a social consensus, because there's incentives that are placed in the right structural way in order to predict the human behavior. And like, sure, that's an experiment that's been going on for like 10 or 15 years. Like, I believe in it. I think it's worthwhile. I think that having a transparent system is better than having a secret system that can't be audited, can't be improved upon, anything like that. Right? But then, I mean, if you think about the credit cycle, even Funding Jim on Twitter was making the argument that maybe printing more money ends up motivating people and basically putting capital at risk to make more goods and services, to make the next technological leap forward, the next batch of inventions, whatever. And so, I mean, this is that I've heard people call themselves that, but I don't want to say economists, because almost all economists in the world are trained in modern monetary theory, which is a branch of Keynesian economics, which AKA also known as the Chicago School of Thought. And it says you can print more money and that's great. And like, if you don't print enough money, the like society will fall apart. Like, it's very convenient that the people who are coming to that conclusion are the ones who are benefiting the most, and to everybody else's detriment. But whether they're right or wrong really is more of a scientific question. It's a question of macro psychology, and so it's yet to be answered in a world full of economists that all think the same way. And then you've got, well, at least academically, and then you've got a major school of thought in economics, where, I mean, you do see some professors who are subscribed to the other type of basically economic school of thought. And, that's the hard money people, the people who, are more or less super into Bitcoin, super into crypto as a way to solve. And so as you would want in any check and balance system, I think it's useful to have a debate going on. It's useful for people to be considering both sides of the, both possibilities. I would say that monetary policy can be good or bad, and like we need to find out which monetary policy is best, right? So I've definitely been trying to keep up with the macro right now because it seems like that's what anybody can talk about. We're in a sideways year for crypto traditionally if the cycle repeats. I don't know that this cycle is the same, but I hear arguments on both sides to be thinking that crypto could have another major correction and crash, that the economy could go into a recession, that the Federal Reserve is not done raising interest rates. I hear an argument for that. I hear an argument that it's the opposite. Just before I forget, I'll also throw out there that the Concoda article that was so powerful that I came across today. Basically, the conclusion, although they didn't go into like specifics or applications, it was very kind of reporting this wildly complicated plumbing situation and like how that's been changing, and not really getting into what are the downstream effects of that, which like, even if you were predicting COVID, were you predicting that there was going to be a flash crash and then that everything in the world, all assets were going to go to new all-time highs? Those are two opposite tail events. So that's, I think, part of what makes it so that markets have potential to go up and down and to have like a normal business cycle, right? Like in a free market, businesses can fail. And so bad ideas go out of style and good ideas become more popular and attract more capital, both the right people, the right funding, all that good kind of stuff. And then you add to productivity, then you add to goods and services. The conclusion from Concoda was that the Federal Reserve's dollar swap network continues to expand, and that the dollar has a super strong end game, basically because of these stealth easing programs. The dollar strength, we can see that it's accelerating, but the world has a complicated relationship to dollars and to a dollarization and all that good kind of stuff. So just, that's a taste for people of kind of where I'm thinking in terms of kind of the background of this stream. Because I was thinking to myself, I was challenging my own assumptions about everything I'm seeing in the market. People who've been following me closely might recall that I was like thinking things are looking up 2-3 weeks ago because we're in our sideways year. The Bitcoin halving is coming up. Like the banks normally wouldn't be able to handle more interest rate hikes. Inflation seems to be coming down, even though it still shocks me when I see it. Like fast, it's been the same, even compared to a year. Now it's sometimes I see it and it's like 20% higher. And of course, wherever I go in the country, it can vary. But in like places that I frequent, I see that the price of gas is the same exact price that it was. Well, I remember because it's 3.69, pretty good number in HEX. So that's like all the good case scenarios. The Bitcoin halving is coming up, and that's always led to a bull run in previous cycles. See, but macro is different this time. And now what are the arguments that this time is different? Because then you heard me say, oh, it's really weird that during a down, basically sideways or a down period in the market, we had Ethereum futures launch, which was the top of the 2017. The top of that market on the day was when Bitcoin futures launched. So I saw that, and then I was like, ooh, wait a second. Everybody's super bullish about that, but creating paper Ethereum isn't actually really good for crypto. It leads to dilution and a short-term downside, right? And so I think investors are always tempted, or people who are thinking about markets are always tempted to think this time is different. And then things usually play out in a way that rhymes with history. But, well, maybe this time is different. We're in a different macro cycle. So like, don't tell me that being in a different macro cycle is not going to influence the crypto cycle. I don't know. Maybe it will, maybe it won't. But I think the fact that the Fed is improvising, like, my gut tells me that could be a good thing for crypto, because then they'll just print more money. But if they keep coming up with these creative ways of printing money, maybe it won't flow into crypto the way that it used to. And so I did a poll on Twitter just a couple of hours ago, but I saw it's already starting to blow up. Let me see if I can share my screen here. Because this was a really important question. I think that's why so many people are answering. It's because they realize that it'd be great to know the answer to this question here. It's a question I asked on Twitter a couple of hours ago is, has your bank ever stopped you from buying crypto with your own money? And this number surprised me, because the amount of people I've heard say something like that, it's maybe like 4 or 5 people. And I would assume, because I know hundreds of people in crypto, that maybe I would have heard more noise. Maybe I wasn't listening or something. But did you think that out of 214 people voting, that 55% of people would have said, yes, my bank stopped me from buying crypto ever, like at least one point in the past? Then 45% said that they've always been able to buy crypto, that there's no restriction from their bank. So that's kind of an important piece of the puzzle. Now, in terms of like the mission of crypto, trying to create more economic freedom and everything, I think even if all banks banned crypto, I think that you could still have, crypto being censorship resistant and immutable, would probably evolve like more quickly than it would otherwise into like a financial system, an actual peer-to-peer cash. But that might interfere with the use case of the store of value. So I'm telling you where my mind has been in the past couple of weeks. It was like I was short term. At first I was like, kind of neutral on everything, and then I was short-term bearish, and then I was like, all right, what's next? And then I remembered this little thing called the cycle of market emotions, also known as the Wall Street cheat sheet. And you've seen me share in the past a version, even a fun version of this, called the cycle of market emojis. But I have several different variations on this particular way to understand the business cycle, and particularly the equities, the investment, the markets in general, I guess, is what it applies to. But people especially apply it to emotional situations such as volatile crypto participation. So let me see. So I'm going to share the simplest version of this first, which is here. The cycle of market emojis starts neutral with some optimism, then going toward, as the price increases or people's emotions change over time. People get excited, then they feel a sense of thrill, and then euphoria, and that marks the top. And then as the parabola starts to fall over, you get complacency, then the price goes down, you get anxiety, goes down further, denial, fear, panic, anger, and these are happening months apart from each other. So they're really hard to be aware of. And if you have arranged your life so that you're not in a bad mood for 3 out of every 4 years, and you actually do have some emotional regulation in your life, to where you can look at the price of crypto and it's not going to ruin your day, it's not going to ruin your relationships, and you're not going to be some trader who is using that basically. And if somebody is in that way, then that's the first step is awareness, and the second step is management of it. And that's something we talk about too. It's like there's lots of people who are going through life not having a problem with mood, and then all of a sudden they get to investing and it takes a nasty turn. And so having the right emotional awareness and emotional management, it's a set of skills, but one of the good starting points is awareness. And a lot of people, they'll experience like a mild form of they'll feel something when they see like an investment going up and down, when they see like their financial security playing out in their favor or against their favor, right? Like the reason why we take risk is not because there is something inside of us that makes us want to be risky and want to lose everything. Although, I don't know, an evolutionary psychologist might argue with me on that. But it's because the monetary system is incentivizing risk-taking as one of the mechanisms that allows capital to transfer into new ideas. And then, and especially if they're not going to let anything fail, then it becomes even more incumbent upon the people who are having their savings stolen from them sitting in cash. They're losing to inflation. And so they have to invest in risky things. They have to pursue new ideas. And that's going back to what we were talking about earlier of like, the motivation for innovation versus like you're just exploiting society, and it could work out way better if you motivated people in other ways. Hint, hint, nudge, nudge, time pays me, right? Once I'm able to explain that in a way that'll make more sense to everybody, I know that many of you maybe aren't familiar with behavioral contingency management, behavioral psychology, behavioral economics, that type of stuff. And that's okay, because I learned it too, once upon a time. And now I'm happy to teach it, and help at least try to make sense of it. So, I think another thing I'm writing about is how oftentimes people internalize things that it's not your fault. And the business cycle, the reason why you have all of these emotions going up and down over the timeline of 10 years in stocks or every 4 years in crypto, right? The reason why finances can like make somebody euphoric or complacent or anxious or angry or depressed, right? Like all of these things are because of the monetary policies, the business cycle that's what this chart is named after. That's what it's based on, is basically Wall Street being experts of profiting off of people not having the same information that they do. It's like, yeah, they have a cheat sheet. That's where this comes from. So the reason why we have these business cycles playing out in boom and bust in, I guess you could argue a way that's not very honest. It's not fair. It's not letting businesses fail that have done a bad job. If the banks fail at taking risk, they get bailed out and they get paid 2 or 3 times over. And if the average person who's working their life away, who's actually producing goods and services, that person is having when they take risk and lose, too bad. Go back and work 2 to 3 times as hard. And where do you think the 2 to 3 times that the bank gets paid out is based on? It's based on people not having a choice. But as I was saying, the worst part is if you blame yourself for this, or if you think that it's your fault. Now, when we talk about PTSD, when we talk about some of these deep therapy issues, there is kind of a paradox of you want to take responsibility for something, but if you do, then it's your fault. And if it's your fault, then you're guilty. And if you're guilty, then you're not really motivated, and it's confusing. And there's all these problems that, it's kind of a downward cycle. But I think that's another reason why the way that I'm starting to even conceptualize the power of crypto, the future of crypto, is based on people having the autonomy to set their own goals, to create their own motivation, to pay themselves. And that could be a different model that if we get it right, if there really is a psychological trick that has a stronger effect size than talk therapy, and it's not authoritarian, it's based on whatever you want, whatever you come up with. And if we trust that what people will come up with is something adaptive that helps them, that is a net benefit to society, then we might really have something there. If we can make people happier, have them work less, and be more productive, be twice as productive, right? If everybody wasn't out there silent quitting, and we had access to everybody had access to artificial intelligence, everybody had access to education and all that good kind of stuff, the stuff that scales. If everybody had access to technology, that would come at very little cost, I think. And it would be a huge investment in the future. And so these systems are evolving one way or another. The Fed wants to keep creating more and more financial plumbing that is, bailing out the bond market this time. Like, you already bailed out the banks. You already, they've bailed out every industry. If you want to see a really good podcast, Arthur Hayes just did one. I don't know how I feel about him as a person, because he created a leverage exchange. They became the biggest exchange in the world for a short time. And then he was like scam wicking people, like hiding out in the island of Seychelles. And then there was like an international manhunt for him. And then he just like pops up a couple of years later, and he's like, "Hey guys, what's up?" Like, I don't know if he got in trouble or what happened, but it seems like there was like a manhunt for him, and like the government had convicted him of all these things, or maybe they just charged him. I don't know. Anyway, Arthur Hayes seems like a really smart guy. I don't know if he's a good guy or a bad guy, but I started listening to this podcast, and he was pointing out how almost every industry in the world has been bailed out now by the U.S. central banking system. So whether you want the old system that seems to be working, but maybe has a lot of potential left in it, maybe if you're not stealing everybody's savings, and if people can invest in themselves and they don't feel guilty about money, if you fix the relationship between man and money, you can keep using the dollar. Like, I mean, and crypto, like if there is a solution there and it can solve the problems that I see kind of going forward with global finance, then how cool would that be? So it's not all doom porn at the end of the day if you're in it for the tech. Now, if you're in it for the risk and the mad gains, well, you're taking risks. So it's anybody's guess whether it'll work out or not. Well, in particular, it's whether they print more money or not is going to decide whether crypto goes up or down. And who has control of that, really? Plus, different cryptos shuffle back and forth between each other. So you could have like a loss of faith in one crypto if there's a bug or something. Like if Ethereum had a bug and Pulse Chain didn't or something, you could see that in your favor, or the reverse, not in your favor. So I've heard people that the cycle of market is not supposed to be based on price. And I've heard people say that it is. But I think for these purposes, we're just going to talk about what is your relationship with checking the price. Does that make you emotional? Does that change your behavior? Does that cause you to sell right before the market is going to do an upswing? Like, is it making you irrational, right? And of course, now is a good time to point out that the power of HEX, and a time pays me for that matter, is that you don't have to trade, that you can take part of your savings and time lock it, so that even if it drips out to you over time, you'll get the benefits of always having liquidity, always being able to take advantage of price appreciation or depreciation as you see fit. But it allows you to not be all in all at once. And it seems like that is a really good emotional management strategy for some people. Wall Street cheat sheet. Okay, here's the real version of this, not the emoji version. I guess you might be able to see it on your screen, but I'll describe it here for the auditory listeners. It's the Wall Street cheat sheet is also called Psychology of a Market Cycle. And it shows the sinusoidal wave of like price going up and time going over to the right. And then you have a peak where there's a point of maximum financial risk because you're going into a contraction and you're buying a top. And then you have the trough of the wave, which is the lowest point, the point of maximum financial opportunity, although it probably doesn't feel like that because you're in anger and depression and the disbelief phase. And so that is how you get the ups and downs in the market cycle. So going from the beginning, you have disbelief that turns into hope. During the hope phase, you're thinking a recovery is possible. During disbelief, you're thinking this rally will fail like the others. You're telling yourself this time is different when history keeps repeating or rhyming. Now, let me go back to the nature of taking risk. Okay, I'm going to show you guys. Before I go through, you guys know the rest of the chart, but before I'm gonna give you yet a third version of the Wall Street cheat sheet. This is the one for degens, and I don't know if it's called that, but it has all the cycles except, so it goes disbelief, hope, optimism, belief, thrill, euphoria. Then it has complacency, anxiety, denial, panic, capitulation, anger, and depression. And then, of course, if it was the cycle, it would repeat back around to disbelief, hope, optimism, so on and so forth, until it gets back to anger and depression. But in this version of the chart, it goes from anger to depression to deeper depression, to wrecked, to rector, ultimate wrecked, ultimate rector, annihilation, and finally, crustaceous pelagian, extinction event. I can't even pronounce it, but there you go. And it's instead of the cycle repeating, the line just keeps going down and down and down, almost like off the chart, so to speak. Like they've extended the chart so that so that you can get this parody version. So just to summarize, like where we're at so far, you heard me saying there's good evidence on both sides that like markets are risky right now, or they're full of opportunity, one or the other. And I've weighted myself in the direction of things will repeat. And that might not be right for everybody. I also position myself to have a small percentage of dry powder ready to go, because I would love to get an opportunity if we get to annihilation or ultimate rector, right? Instead of just pouting from the sidelines because I bought things at 10 or 100x higher than they could go to. Now, do I think, like, if I really thought that we were going to go that low, I would have lots more percentages on the sidelines. But everybody's financial situations can be different. So really, you're going to have to ask yourself what you want your relationship with risk to be. And, that's going to come down to like, how many working years do you have left? Like, what income do you have? Like, what are your expenses? Like, what do you hope for in the future? What does economic security mean to you? Like, what does it take for you to be happy? Those are questions of economics and psychology and your quality of life. And if you're ever outsourcing that to somebody else, that can be a pretty normal thing to do, but it's probably not very healthy. It's not a good relationship to have with somebody that you listen to as a broadcaster or a source of entertainment. I mean, even entertainment, it's, whoever you have your people, places, and things. I'm sorry, like a better way to say that is like, you will become the sum, and your behaviors and motivations will become the sum of the people, places, and things that you include in your life, which includes what broadcasters you listen to, what media you consume, what entertainment you fill your life with, and lots of other decisions, right? So I can't tell you what to do, but maybe I can at least ask the right questions of myself to get you started. And, so that's the goal here, again, of this episode, is to raise your awareness of where we're at and where we're going. Has probably the thing that's for certain is, to some extent, the more we are aware, the more we can choose what relationship we want to have with money and the world. And there's a lot more to the world than money, right? The relationship we want to have with ourselves. And part of my book is going to talk about self-esteem. And it's going to hit really hard, because I think that there's a whole monetary system that's been built on the belief that people are bad with money. And in fact, it's the monetary system that's bad with people. So how's that for a banger? There's a couple other charts that I haven't seen before. The three that I've shown you here, I've seen before, but this is very similar. But it just caught my eye because it had like a colorful picture of the brain showing hemispheric differences between the creative and the analytical part of the brain, I assume. But this picture caught my attention. It shows the psychology of a market cycle broken into the phases of smart money, institutional investors, and the public, also separated into the timeline of being in a stealth phase, an awareness phase, a mania phase, and a blow-off phase. And then the points along the kind of double peak, kind of a double top formation here. You start off with a line going up and to the right with a takeoff. Then you have a first sell-off, so you get a bump down into a bear trap. A bear trap is where people think that it's going to become bearish all of a sudden, and it looks like the price is going down and they're right, and then the opposite happens. There's a recovery. In this case, they label it as media attention. Price goes up. Enthusiasm, price goes up faster. Greed, the steep curve accelerates even further. Then delusion, we've seen that before. I'm looking at you, everybody in the HEX community with me. I think we've all been there, like that's okay. Again, not blaming this on ourselves, blaming this on a monetary system that we ultimately can become responsible for fine-tuning, having our relationship be right, that sort of thing. The peak here on this chart says new paradigm, and then you have a steep decline in the denial phase. Then there's a bull trap where the bulls think that they're going to be right, and the price goes up to cause them to think that they're correct, and then you get this down forever, seemingly very steep price decline, which is labeled as the return to normal, and then fear, and then capitulation, and then despair. And then this chart shows a line back up, returning to the mean, where the cycle starts over with takeoff. And as if we didn't have enough variations of this, here's the final 5th version. But again, if you're new, you got to get caught up. And if you've seen this before, you want to learn something new, right? Hit the like and subscribe button for that one. Okay, so I'm going to read the psychological pitfalls of a market cycle. Source, New York Life Investments, 2020. The chart is hypothetical and intended for illustrative purposes only. How's that for disclaimer? Starts off with disbelief. After previous losses, the fear of losing more money outweighs all else. Does that sound familiar? Then you've got uncertainty. The herd hesitates and misses the optimal window to enter the market. Okay, so Ethereum, what, did it dip all the way down to 900 and now we're at 1600? It's not the very bottom, but not everybody liked pain enough to buy down there. Of course, in HEX, we've had a different story play out with our price chart. Has not followed the rest of crypto, which is fascinating in and of itself. And I talked a little bit about that. Actually, I talked a lot about that with Dipcatcher in our special 2-hour episode a couple days ago. The next point in the chart is optimism. The herd's sentiment begins to warm only after prices have risen. So this doesn't apply to everybody in the HEX community necessarily. You do have some people who are much better at gauging market sentiment than others. But if you're not aware, I think if you're part of regular retail, somebody who hasn't learned a lot, for me, when I was at that stage, I was playing into this like a fiddle. In the sense that even though I could manage the emotions and it wasn't a focal point in my life, I would have the same frustrations and the same emotions, even if it wasn't 24/7 like crypto is, even when it was a smaller part of my life. And of course, now I've got so much awareness and management that I think I do all right, thankfully. But again, it's something you not only have to learn, but you have to practice these skills. It's totally different to theoretically understand something versus to live it in a lot of cases. Enthusiasm. Market demand jumps as the herd rushes in to buy. Euphoria. Investors share a collective dopamine rush as markets peak. I'm surprised they don't have a brain on that one, on this chart, like they did on the other one where they didn't mention dopamine. Yeah, key neurotransmitter in feeling pleasure and addiction. Overconfidence is the next part on the chart, and it says the herd continues to increase their position despite high valuations. What do we always say? Doing a DCA is the best strategy in and out. It's not very debated, but it's often not followed. But of the people who are usually doing the best in markets, it's people who are not actively trading, because the more you pay attention to this stuff, the more you play in to the swings up and down, which can cause you to become irrational, right? And it probably, people who don't experience that are very unusual in the sense that there are twice as many people who lose when they invest in crypto than the people who win, probably because it's so volatile, and probably because the more actively they're trading, like in traditional finance, the worse that they're doing. I mean, even hedge funds, even like the best analytic minds in the world still lose money more than a DCA strategy. So that's actually pretty shocking that's how unpredictable the financial system is. And it's almost that it has to be somewhat unpredictable. It's like, but then you would assume that some of the gains are coming from like true signals in the market. So like if you learn about HEX, like HEX has 100% uptime and like actually adds value by incentivizing people to time lock, which like creates more value in the here and now due to scarcity, market shock. Like if there are fundamental reasons why the thing you're investing in is doing well, that could have actual value because it's pointing out a new direction in financial technology, because it's changing people's behavior, people's market behavior. So if you have not suffered, as most people would have, paying a lot of attention in this crypto bear market, and it might be the reason why we have such high participation and viewership, 10x higher than most other cryptos that would have 90% of people not tuning in anymore. We have 50% of people tuning in. So we have a 5x amount of retention. And I think part of that might be that people are not getting as emotionally burnt out as they would be on a high financial media diet otherwise, if you weren't time locked, right? So yay for that. Hopefully I'm reading the room right. But and of course you could be time locked and still be, even a small percentage liquid could still have magnifying effects on your emotions. It's not to say that, but it's to say that HEX is not burning people out so much emotionally. It might be slightly affecting your life, but it might not be burning you out so much that you stop tuning in, or that you stop learning, or you stop thinking rationally, or so on and so forth. I hope you're enjoying this deep analysis. I do this solo type of stream once a week, 149 weeks and counting, never missing a week. So leave me a comment if you're watching. We usually have several hundred, if not thousands, of people watching on the replay. And so take a moment out of the 149 weeks of episodes you've listened to. Maybe this is your first time to leave a comment and let me know what you think. And like, you can be so nice about it that it would be a message that you would be willing to get yourself if you were in my shoes. Is usually a good guideline for like how to make it so that the comments section isn't so full of hate that that the creator doesn't want to read it. Usually when I go in there, it's all good. So like if it's your first time, keep that in mind that that the comments section, it's supposed to be a safe place here. And but I'm curious to see what's your experience been with these 5 different ways to look at the theory of market cycles. What has your psychology been in this longest bear market in crypto history? What's the rest here? Well, you've been living it. Anxiety, maybe not that much, but the people in FTX, people who didn't invest in the right crypto, people who bought HEX at the top, people who didn't time lock, who aren't here for long-term purposes, are probably going to have experienced way more anxiety, fear setting in as losses begin to mount, denial. Investors ignore the warning signs as market demand weakens, panic, prices plummet as the herd rushes to sell, capitulation, you've heard that word. That's when the herd accepts its losses and completely exits the market. You got agony. Steep losses take a psychological toll on many investors, and the sentiment cycle restarts. And then depression. The herd is indifferent as markets inevitably begin their recovery. For me, what did I do? I time locked 50% of my pulse for a year. I time locked 10% of my pulse X for multiple years. I'm gonna have to go back and look. I know I time locked 1% of my pulse and pulse X for 55 years. So, does that help me sleep better at night? Probably. Now that I've been trying to accumulate and, dollar cost average in with kind of disparate savings, disparate dry powder, the Ethereum gas fees the other day was like 25 cents to send ETH. So I collected all my ETH dust from different accounts and like turned it into some PulseX. Maybe I'll have to do some more time locking with timepays.me now that my ratio of liquid has changed. But you'll hear me talking about that more. You'll hear me writing about it. It's won't be a mystery for long. I have 80 comments that I haven't gotten to, which seems like it's way more than usual. I'm going to check in here with you guys before we call it a night here. And we're alive. Hello, Jay Pond, Chris, welcome. Hello, Drex, Crypto Truth, We Live, and in Alpha Action. Welcome, everyone. Hexagon Lost in Asia. What's up, Maddie? Thanks for therapy today. This is not therapy advice, but Dr. Phil can call himself a doctor. We'll say that this is a group, it's not group therapy either. This is free speech. This is public commentary. How about that? It says that in the show notes too, by the way. I put a lot of effort into the show notes, always have. You should check it out sometime in the description below on YouTube. Maddie, you're doing great, monumental in community building. Thanks for the kind words. Crypto Truth. we continue building and sharing in what is accurate and important. Happy 3rd birthday. Thank you. Also, Crypto Truth saying in 15 Ways to Fix the World, Richard Hart has a chapter on sudden wealth syndrome, is the largest chapter. I fully recommend also viewing additional information on counteracting sudden wealth syndrome. Perfect. What's up, Grav? Crypto Class, good to see you there. Lazy Hexakin. Stream is a bit choppy and random at times. That is unfortunate because I've been on a roll. I think it's because I am using my own hotspot right now. Go figure. I sacrificed for fiber internet and now I'm on the road. Believe in Yourself says that his normal on-ramp has not been accepting crypto lately, not been allowing the buying. Crypto Khalil, what's up? Crypto Class thinks that we're in between depression and hope, for sure. We're past anger and depression, says Crypto Khalil. Let's see. Armando having euphoria withdrawals. That's a thing. That's the dopamine. You gotta take care of yourself there, my friend. Great stream so far. Thanks, AW, I'll say. And if you're not following on Twitch or on Twitter or on all the other weird platforms I've got as backups, go check those out in the notes below. Somebody was watching in real time and said that they think I am the first person to ever say the statement, they bailed out every single industry. But then you probably heard me say right after that I gave credit to Arthur Hayes for that and went into a whole tangent about what I think of Arthur Hayes. But yeah, well, I had not heard that until just earlier today. So I'm like you, just coming on to that idea myself. Rebels in the anger phase there. You will not win. Lazy Hexakin knows the chart or is LOLing at it. Maddie, what are your price targets for Pulse, PHEX, and PulseX for this bull market? Well, nobody ever asks about EHEX, so I'm pretty bullish on that. Although BankX has a lot of it, so that's not cool because they like to sell, and I don't trust them for good reason. See previous streams. I like Deci. I bought it at a discount, but it's a little bit less liquid, so it's more of a long-term hold anyway. But if I'm holding liquid and I can sell it for 70 or 80%, at least of what I put into it, then I would rather be earning on that than paying inflation. For Pulse and PLSX, well, for PHEX, it comes down to how many people are going to talk about it and not talk about unrelated projects. That's kind of part of the equation here. For Pulse and PLSX, they were given for free to people who sacrificed for freedom of speech and freedom of movement during a time when the price of HEX was much higher. And you've got SEC uncertainty that's already playing into the price values. I think if Ethereum and Bitcoin go up, I think Pulse and PulseX will be right behind them or in front of them. Who knows? But there's too much uncertainty. For me, I don't have enough of either of them. And but so I'm slowly accumulating, but I'm not getting carried away because I want my emotions to be in check. And if there's a severe dip, I don't want to be salty about it. If I was all in now, I'd be salty about it. Now that means I can be okay if the money I have on the sidelines now gets left behind, right? I don't want to just buy into a huge pump. Or you could have the philosophy it's okay if you buy into an early pump, as long as you don't sell when you get the bear trap. So like, pick a strategy. DCA is always like price targets. They'll probably keep printing dollars. And so the price of technology that's scarce and useful and popular and people are talking about it, I think could continue to do well long term and medium term. But short term, who knows? Did I sell the DeLorean? No, it's still for sale. I'm going to give the community a few more days to DM me on Twitter and Telegram. Ooh, all right. So last_lease caught this explosive statement that I had said earlier. Quote, people think they're bad with money, but it's actually the monetary system that is bad with people. That's definitely your listening comprehension is high, because that's really central to my philosophy and why I'm writing my book and why I created Time Pays Me, and what I've been talking about for 3 years straight now is like part of that concept. And you'll notice, whether you're new or you've been listening for a long time, that you might find my ideas more organized and refined and coming off a little bit better now that I'm writing about things. I hear that writing has that effect on the mind to make it easier to speak about things and to think through your own ideas. Conviction plus envision equals manifestation. DCA says Ramlos. Everyone afraid of learning new information is delusional. How many of you use non-DeFi to use Pulse Chain? I would guess it's less than 1% of people who are using centralized exchanges to buy Pulse. Like, I forget which ones even still have it. Coinbase is not on Pulse Chain. Sami said it best. Everyone in once green candles show up. Maddie, why are you selling your assets? I've talked about that previously. I never bought a scratched up Rolex like Ben Armstrong, but hey, to each their own. Maddie, you're killing it. Loving your streams, Maddie. Hey, thanks. Discipline. You're amazing, Maddie. Well, everybody said that all at 8:40. I'll have to go back. Well, 15 minutes ago. Okay, I guess that's when I gave my final summary there. Fully on point, Maddie. I think I'm at the agony, maybe agony 2.0, says Matt. Let's see. Getting caught up here on the comments. Speaking about what is most important will always be the most valuable discussion to have. Oh yeah, so the reason I was making the point that people got the airdrop basically, it's because if you truly sacrificed like I did, then any value that you got from Pulse Chain and Pulse X was up from zero. So on one hand, you can compare what you were sacrificing with no expectations. You can compare the price of that to what you have now. But that's not really how the airdrop worked. And there was a lot of years, plural, where we really didn't know we were going to get anything. And so that's important, like from a security standpoint. And I can, everybody can vouch for it who is participating. Is, like in cryptocurrency, the last thing that you would do if you had an expectation was to send your crypto to a different address. You would, it's like, if you took all of your money in physical cash and set it down on the middle of the street and then never came back for it. It's like when you send a crypto transaction, it is final. So I don't think there's even a strong case at all that people who sacrificed were investing in something, because all you had to do was check the community sentiment, and everybody's like, what the hell, this is never going to launch. Oh yeah, like even if you had no expectations, like people still got trolled about it, right? By people who weren't even involved, who didn't get it. People who didn't, I guess, people who weren't so impressed by the movement, by the community, by the gains that they had already had, that they, like, we did make a statement about free speech and freedom of movement. That's when the truckers were getting shut. Their bank, if you donated to a Canadian trucker or you bought them lunch, your bank account was frozen in Canada. Like that's like there was severe financial oppression happening. Like, so to make a statement is that is free speech. That is allowed. It's allowed in politics. It's allowed in like in the law. Remember the thing that the courts hold up? Oh yeah, that. Not like whatever the SEC says and then change their mind on, but has not passed any law. It's so that's a long way of saying the airdrop was zero value and zero expectation. And so if you see people selling, one way to think about people selling is that they got their token for zero and they are up infinitely. And so the price we don't have to be talking about one particular crypto. The price can go up more than you can imagine, and it can go down more than you can imagine. That's the name of the game. That's how it works. And go figure it out. I like Maddie and the time he spends helping others. Somebody who is saying things that made me not realize that that's how you felt about me. So thanks for saying that. Johnny Chaos, what's up, my friend? Prepare now, before emotions come into play. The bull brings a different set of issues. Well put, very well put, Johnny. RH wanted to create a great legacy, and it is the community. He enabled many to experience the feeling of being invincible. Believe in yourself, very on point comment. If this is not the bottom, then we are all effed. There you go. Well, look, I'm glad that you all tuned in. I don't know how choppy the video was. I'm glad that at least a couple of my quotes came through, and judging by 65 people watching the whole time, that's much appreciated. I know that Hex Therapy Live, like maybe it hasn't. Well, all right, I'll tell you what it is. It seems to me that if I do some good clickbait, 1.7K of you are going to tune in. And if I don't choose that strategy, then it's like 800 or 900, right? That's fine. Look, I don't need only over 1,000 views to, it's about who's watching and what they're getting out of it, not how many people are tuning in for 3 seconds and leaving. Now, look, I enjoy having more viewers because I'm saying something that people find important. That's good for me. But I also love the fact that YouTube is counting an average with people watching for 15 seconds, and the average view time is like 24 minutes on this channel. So that means a lot of people are watching the whole thing. That means I hope you're getting something out of it. So again, if you're finding this useful today, let today be the first day you're watching on replay or you're in the live chat. Leave a comment. Let me hear from you at least. And with that being said, yeah, thanks so much for tuning in. We had another successful episode tonight of HEX Therapy Live. You can learn more about my project by playing around with the testnet or on mainnet, timepays.me. There's a tutorial on Twitter. The website is https://x.com/timepaysme. So do your own research there. It links to our audit. allmylinks.com/ALLin is where you can find all my different platforms and places I like to publish. Let's see. You can get a hardware wallet by clicking the link in the description below. It supports the channel and you pay the same price you would otherwise. Security is a big deal, you know, so take it seriously. And there's rumblings that the company might be coming out with some new product, but I wouldn't know. But if I did, that would be something I might review at some point coming up. So that'll be fun. And yeah, I think a lot to look forward to in terms of what I'm learning and doing. So hit the like and subscribe button. And until next time, stay wisely, my friends, and peace out.
It's from Maddie ALLin of HEX Therapy Live. I like Maddie. Maddie tries to make the world a healthier place. He's a mental health professional. He's done research.
Videos on sudden wealth syndrome.
There's nothing that a human being could do better than try and heal his fellow man.
Maddie ALLin's got that covered. Does emotional, feel good, mind management, emotion stuff like as his gig because he's a therapist. That's what he does for a living. Like he helps heal people.
Actually, let me see if there's anybody we can raid. If you're still listening. Let's see. Are any of the other HEX streamers streaming right now? Okay, not at the moment. I guess Dollar Cost Average is doing his class. So until next time, peace out.